When you pass a boutique or designer brand, do you think about the extravagant costs of the items? I don't know about you, but when I pass by boutiques of designer brands, I think to myself that the total cost of the items inside could be equivalent to a lifetime's worth of my income, or probably even more. Yeah, it's most probably the latter. My income is a far cry from the price of a Raja medium crocodile bag from Gucci and a Manolo Blahnik Hangisi pump combined. Throw in a Graf Diamonds hallucination watch in there to complete the whole ensemble. Let's take it a step further. Say you enter the boutique. You're met with a curious and maybe even more confused stares from the employees wondering if you could afford the items they offer. You're completely out of place. You make your exit thinking to yourself that the items on sale are impossible to buy. The only thing you can afford in places like those is to go window shopping. Might as well stick to your local flea market and thrift shop, right? Hi, welcome to the Wealth Monopoly. Haute couture clothing, high-end watches, sports cars, designer handbags and shoes. Buying any one of these would be a miracle for the average Joe. However, for those who are insanely rich and overflowing with money, they consider these investments. If bought at a retail price, rest assured that there are people who are willing to buy it from you at 100% profit or more. These luxury items don't have to follow the same price controls as regular consumer goods. They don't adhere to the expectations of supply and demand. How does this whole practice make sense when we look at it from a traditional economic perspective? Continue watching to know the answer to that question. In your journey of wealth, it's important for you to understand how luxury goods, though relatively expensive and unessential, play out in our economy. The first point is that being a luxury good is not enough of a qualification to be part of the club of market breakers. Second, these goods are scarce. Limited supply is common for luxury goods that incorporate scarce materials. As a result, their inherently expensive price is justified. Third, these goods have a high demand. I won't go into this just yet, but please do highlight this point in your head. The final point is the refusal of movement when it comes to the price. In the usual market scenario where demand exceeds supply, prices increase to the point where demand equals supply. Those who can afford to buy at the price do so. All these descriptions point towards Veblen goods. Contrary to market expectations, higher prices mean higher demand for these goods. If you want to flaunt how rich you are, then the more expensive the item, the better. Tote bags are definitely in these days, so why don't you hop on the trend with a touch of luxury with the $1,700 raffia tote from Prada? The companies could just increase their prices to the maximum possible amount, but they don't because they value artisanship and aesthetics over money. Oh, how passionate! They say that they don't charge more because they care about their clients. You and I both know that doesn't make any sense. These companies are owned by huge multinational corporations whose shareholders are passionate about their return on investment, not artistry. To tell you the truth about them, let's start by establishing this link. You may or may not have noticed that these products are not sold by the companies themselves, but by the authorized dealers. This is actually seen in the purchase of cars. Think about an Audi A8. You can just lust over it on the Audi website, but you'd have to go to an authorized dealership to actually purchase it. You get it, right? Remember that it is the authorized dealers who handle the sales of these goods, while the manufacturers focus on the exceptional artistry and unique aesthetics of their products that they boast about. Thanks to the dealers, they can operate in foreign countries with ease. Well, of course, with pros come cons. Dealer competition may arise. Dealers may also be tempted to set their own unreasonable prices. A dealer's selling strategies are made with the intention of earning a hefty commission. How many of them care about brand reputation? Dealers that sell more items will receive stocks of the most limited and sought-after pieces. They are not allowed to set a markup for limited edition items, but they can use this as a tool to establish customer loyalty with the insanely rich whose money is spewing out of their hands and they have nowhere else to put it. So they just splurge on the most expensive luxury goods available. Regular customers will get first dibs on rare items. What a way to establish superiority in a circle of rich and wealthy, and what a way for dealers to make more sales. Win-win. From the perspective of the sensible manufacturer, they produce a range of goods while injecting a sense of uniqueness and limited availability to some. Rest assured, the dealers will cheer them on and be open arms to the regular stock as long as they get special allocation for the unique stocks. As for the customers who regularly purchase from the dealers like they're stopping for groceries, they are prioritized when the limited editions come in stock. Manufacturers maintain a brand of luxury. Dealers get their commissions. Customers establish their status symbol. All the characters are happy. That's how the play goes. The manufacturers, dealers, and consumers look like they're in a good place so far, right? Let them relish in that for a quick second. While they're at it, please do give this video a thumbs up so we would know that you enjoy the content we produce. We'll also take that as a sign that we truly have helped you in your journey of wealth. By this time, you already understand the significant price gap between the retail cost and the fair market price of these items. If the client wanted to sell, he would have to consider much more than that because the purchase wasn't an isolated transaction. Remember how multiple purchases were made before they were considered regular customers who had the first dibs on the special items? The regular transactions made for them to be considered for the special ones have to count when you want to sell. Here comes market equilibrium. If you invested by purchasing a rare channel vintage shiny brown crocodile timeless bag, then you want to resell it in the secondary market. You would first have to purchase a number of bags that don't scream limited edition. Although these are still luxury items, they will lose money in the long run. This is because they're not difficult to come by, so they can't reasonably demand extra price in the second market. With the gap between retail price and secondary market price, you lose $2,000 every step of the way as you climb the 10-rung ladder to a limited edition offering. Let's say you do actually sell all of these. Don't celebrate just yet because you've only broken even. You didn't gain more than what you've invested, not only in terms of money, but also in time and effort, as is ideal. If luck is on your side, you would gain profit, but it would only be a speck of what you spent in the first place. It's not even close to satisfactory. Deserving yet another bout of recognition, ladies and gentlemen, this is market equilibrium. These luxury brands do not simply sell individual items. Collections are in their game and they are good at playing it. People dripping with money are more than willing to purchase all the qualifying items to build their collection. The next time you see a dealership, think of it as a bidding gallery instead. Now, they don't bid with money. They bid with the number of luxury items they can buy at an outrageous markup. So if you don't want an entire collection and you're just looking to purchase a single item, say a bag for daily use and for all occasions, it will be wiser to buy at a resale price. You don't have to hoard bags like you're creating a museum for it. To retract what I said earlier, luxury items are market shifters, not market breakers. Another reason why you might struggle to launch a lucrative little side business, flipping high-end items, is that the manufacturers are rather strict on this matter. They fear that resale could cannibalize sales of their full-price products and dent their image of exclusivity. Remember when I asked you to highlight the word demand, which I mentioned earlier on in this video? I did so to introduce you to the main characters of this play, the actual end users. This all comes down to the individuals who want to sashay about with a $3.8 million handbag around their arm and a $31.19 million watch on their wrist. One of the most essential elements of market demand is anticipated price increase. With the prospect of future price growth, luxury goods have been able to masquerade as investments. These are more practical means of investment that do not involve extravagance. This entire scenario is based on the assumption that wealthy consumers will flock to the stores and purchase expensive luxury products. The fact that these are just ordinary items that respond to market forces in the same way as any other item is covered up, providing the impression that they are something unique enough to be considered as an investment. So, are luxury goods investments or not? I've been rattling on and on here. You have all that you need to know. It's for you to decide if you consider luxury goods as investments or not. Don't just go for the bling that will only give you temporary satisfaction like it's a fling. I'm just here to remind you yet again to know exactly where your money goes. Make wise investments that will aid you and will help you thrive in your journey of wealth. Please subscribe to our channel and ring your notification bell so that we would continue to be on this journey with you. See you in the next video.